Homebuilders say the U.S. is in a housing recession. Why would they say that? And should you continue investing in real estate? Buy now or wait? What's up, everybody? I'm Sean McMurray, co-host of BPM Reia Online, and this is Mr. $250 million in real estate transactions, my mentor, my good friend, president and owner of BPM Reia, Anish Dave.
Hey, this is Anish Dave, CEO of BPM Reia. It's good to see you guys. Thanks for joining us.
So you're a new investor, or hell, any investor for that matter, who's worked hard to get your ducks in a row. You want to invest in a home, but right before you do, you see this report. The National Association of Homebuilders Wells Fargo Housing Market Index. Yeah, that's a mouthful. I feel like when they were creating this index, they were like, dude, I have an idea for a survey, but let's see if we can name it with the most words possible. Say less. To be honest, it makes sense. So you see this report that says, well, let's not get into that just yet. So what is the National Association of Homebuilders Wells Fargo Housing Market Index, and why is it important? It is an index based on a monthly survey of homebuilders comprised of three components: current sales conditions, sales expectations in the next 6 months, and buyer traffic. Why is this important, Anish?
So, we're always looking at home builders. Yeah, I'd be a little worried too, because you can't just build up a house in a week or two or a month or two. It's going to take 12 to 18 months. So it is a little bit different because you have to forecast pretty far out. So yeah, I'd be a little worried too if I was a home builder right now.
Okay, so basically what you're saying is it's important as U.S. single-family housing starts are seen as key economic indicators, which provides valuable clues on the near-term direction of housing starts.
Yep, that's correct. That's exactly what they're doing. Is they're forecasting, and they really want to see. They won't know what's happening in a day or two because, again, it's going to take some time to buy some land, and once you even buy the land, to build these houses. Even if you're a very good builder, it's still going to take you 12 to 18 months.
Ah, okay. So now that you guys understand what the National Association of Housing Builders Wells Fargo Housing Market Index is and why it is important, let's get back to you, the investor. Focus now. You've worked your butt off to save money and prepare to buy a home. You're pumped and ready to get into the game when you run across this index. You notice the index dropped 6 points in August to 49, which causes you to dig further. Keep in mind, anything below 50 is considered negative. You look at the chart and notice the index has fallen for the past 8 months. You are fortunate enough to have gotten you in a niche. So you ask him, Anish, is this bad?
So actually, you'll be surprised, Sean, it's not actually bad. It's actually a good thing, meaning there's going to be some more inventory. They're not going to stop building, right, is number one. Now you have more inventory. And of course, we're looking as long-term investments. So as long-term investments, we might buy and rent it out. We might do short-term rentals. So for us, we're always based on cash flow. Maybe we'll get some seller credits or developer credits, or we'll get those extra add-ons, or maybe that pool thrown in for free because they're desperate to sell.
Well, that's great. Now, the great thing is you also read a statement that the National Association of Home Builders chief economist Robert Diaz made, stating, as signs grow that the rate of inflation is near peaking, long-term interest rates have stabilized, which will provide some stability for the demand side of the market in the coming months. You also read that despite higher costs for land, labor, and materials, about 1 in 5 builders in August reported lowering prices on average 5% in the past month in an effort to increase sales or limit cancellations. So that really plays into what you just said, Anish.
Yeah, Sean. So, 5%, that's awesome. If you're looking at a house for, let's say $200,000, you just saved $10,000 just because the builders are, of course, leveraged out. They need to move those properties. So it's a win-win.
But then you go back to the NAHB index, which reads, current sales conditions dropped 7 points to 57, Sales expectations in the next 6 months fell 2 points to 47, and buyer traffic fell 5 points to 32. The total volume of single-family starts will post a decline in 2022, the first such decrease since 2011. But you being new to the industry, or hell, maybe you're a vet dealing with your first downturn in the market, you have an Anish, so you ask him, Anish, what does this mean?
So what I'm really excited about, Sean, is that when these numbers go down, a lot of those newbies, or really people that are not true investors, they're out of the market. The bidding wars go away pretty much. You're allowed to ask for seller credits. Or even on those credits, they might actually help you on buying down the mortgage rate. So there's a lot of moving parts. So the best time to invest is when other people run away, you want to jump in. Have your numbers, have your team ready. It's the prime time to get into real estate and buy your first or second, or maybe your 10th property to build your portfolio.
So let me postulate this scenario to you, right? So if home builders are having to give credits in order to keep properties moving, will it ever come to a point where it's just not profitable anymore and they pause building, or maybe they reduce the number of homes that they're building, and so it actually has the opposite effect of increasing supply, right? Maybe there's a limit on supply because they're having to ensure that not only are they moving properties, but that they're able to turn a profit on them.
Yeah, and you know what? It is true. For home builders, they're in a different world, right? They're leveraging millions and millions of dollars is number one. Number two is it also depends on the market, right? So what's happening here in South Florida may be very different from what's happening to a Michigan or Ohio. So if you're a builder there, you may be a little bit more conservative. In Florida, the building is booming, or builders are really loving it. And the other thing is, again, it takes time to build. So if they're well capitalized in their money or their financial situation, what's going to happen? They're going to be ready when it turns back up. So think about the pandemic when it first started. All these builders stopped. So that first year, or 12 to 18 months, guess what happened? There wasn't enough inventory. Now they're playing the catch-up game. So the good builders really build this in their formula, and they know what they're doing.
All right, so you head back to the drawing board, watching more YouTube videos on BPM Reia Online, and you realize you have a plethora of resources at your fingertips to include an Anish. You ask Anish, what should I do? Oh, just 1 second, Anish. Just your friendly legal disclaimer. We are not financial advisors and cannot provide financial advice. You must do your own research and make the decisions yourself. Back to you, Anish.
Yeah, so, again, we love the data that's coming out there. You want to go ahead and look at what home builders are doing, but that's not the full story. So make sure you're looking at different data points, right? Meaning, are there large companies moving into your area? Executives. Great thing that's happening about South Florida specifically, a lot of big companies are moving down here. A lot of hedge funds. They're moving their headquarters out of Chicago, out of New York. So when that happens, we actually have high-level executives and other high-paying jobs come into our area, and guess what? They need homes.
Okay. So would you say basically be patient, buy distressed properties below market value, or switch your market altogether, save money and or acquire funding streams, explore creative financing options, be conservative with your ARVs? Would those be solid suggestions?
Yeah, Sean, I'd say yes, 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 yes. I don't know if I got all the yeses there, but you hit it on the nose, Sean. Absolutely, right? You want to look at different streams of income. Undervalue definitely helps. The key is you don't want to keep chasing, right? Get good at one thing and then add something else to your tool belt. It's like anything else out there. You can't be great at everything at the beginning.
So the housing market is changing, y'all. If Julio had stopped investing in real estate, he wouldn't have closed on a $140,000 profit deal, split 50-50, and he took home a $70,000 check and put zero down just last month. This past Wednesday, we have another deal that is bringing in $23,000. There is increased risk and it must be taken into account, but make sure the numbers make sense and continue to get out there and find these deals. What do y'all think? Are y'all still out there making deals? Comment below. Don't forget to like, share, and subscribe to the channel. We aren't the doom and gloom type, nor are we just hopelessly optimistic. We are the solutions people. We find ways to make things happen. Anish, final words.
Yeah, so I mean, Sean brings up great points of, being out there persistent. And if you're really worried about losing money, well, you know what? Use my money. Join our team because I'm not going to lose any money. And I'm going to make sure I put money in your pocket. Money in your pocket's money in my pocket.
I'm Sean McMurray.
I'm Anish Dave. Real estate investing made simple.
And we're out.